Hey everyone, it's Minasuma here. Today is 17th of April 2025 and this is a weekly market recap. We're going to check the health of the market, indexes, crypto and stocks. We're going to look into the fear and greed index. We currently are sitting at a level of 19 on the extreme fear value. I personally like to follow this as a contrarian indicator. It means that when we are reaching a value closer to 3 or to 4, like we saw past 7th of April, then it could be a potential area of bounce. And then when we actually achieve an extreme greed position, it could be an area that we need to extreme precaution. However, it's very important to notice as well that the market can remain way longer on extreme greed than it does on extreme fear. So you will expect the extreme fear periods be extremely volatile. And looking into a comparison between the SP 500 and the VIX, we can clearly see a high volatility period. The maximum was reached on the 7th of April this year with a maximum in the 60.13 area. And since then, we're naturally bouncing back. So we have the SP 500 going upwards and then the volatility slowly decreasing. However, these volatility values at the moment sitting at 30 are not normal. They are very high and an area of comfort tend to be between the area of 11, 12, and we can see a clear distinction. As soon as the prices of the bigs no longer touch the 12 area, we can see, and the prices started trending higher above this line, we could see a completely opposite move that the prices of the SP 500 were trading lower and lower. Following the golden cross system, we've got the exit in all the stocks before obviously this dropped. Now, where we are sitting at the moment. So on the Nasdaq, SP 500 and Dow Jones Industrial Averages, we have the prices trending below their 200 moving averages, which are represented by a red line. The teal color is actually the 50 moving average and has already been crossed on the SP 500 and then on the Nasdaq. We are almost going to close on the Dow Jones as well. It's no good signal overall. The reason is because the price then will face an actual rejection and it will have trouble obviously within this risk. That will be our first biggest resistance in the future as soon as the market recovers. So over the long term, we can see how the 200 moving average acted as a support in multiple locations here, and as soon as it was lost, acted as a resistance. Potentially in the future, we will be facing a similar situation. But obviously, we'll need to see how the market unfolds. Also, doesn't mean for those who are not currently on the market, it means better opportunities in the future to join in. It's very important that we don't lose the minimum registered on the 7th of April 2025. Otherwise, the situation can look very, very ugly from a technical standpoint of view. Moving into indexes, we have the Dow Jones Industrial Average that activated a double top. It completed. We have a first Fibonacci retracement, second Fibonacci retracement that was as well achieved. And in line with previous comment, it's very important that we don't lose the 36,611 area, because if we lose the previous minimum registered on the 7th of April, then there is high chances that we'll activate a third Fibonacci retracement wave. Also, the bounce that we had this week hasn't reached yet the 61.8 Fibonacci retracement level, which passes around the 41,000 area. Only passing this area and passing the 200 moving area by probabilities will be closer to an actual or being able to go to all-time highs than not. So as usual, we need to monitor the market. There is no clear signals at the moment, and we are just simply in a correction phase. That applies for all the indexes, the Dow Jones, the SP 500, similar case, first Fibonacci retracement, second Fibonacci retracement, and normal bounce. Areas obviously of resistance, we've got the 200 moving averages, and then this previous maximum registered, I believe, on the 5,795. And then moving into the Nasdaq. So the Nasdaq has quite interesting shape. It basically, I wouldn't call it even double top, because the two tops are not within the same area. However, it did activate an actual divergence. A divergence is when prices goes, there is a decorrelation between the prices and then the RSI. So if we draw here, we can see that the prices are trending higher, and however, the RSI is trending lower. So it does exactly the opposite move. It was activated after losing the 20,538 area, achieved the objective, the bearish objective, first Fibonacci retracement, second Fibonacci retracement, and very important to not lose the previous minimum of the 7th of April. Right now we have multiple resistance along the way, and also the big important one, which will be the 200 moving average. Moving into crypto. So crypto is currently, especially Bitcoin, is currently trading on, I would say, like lateral or an actual downtrend channel, with minimums and maximums downwards or going downwards. We still have activated the objective to reach around the 70,000 area, a double top or a rectangle consolidation period. 200 moving average is trending, or the price is trending below the 200 moving average. So we'll need to wait until the price is able to surpass it. Also, in a very short term, we can even see, it's not entirely clear, but we can see a head and shoulders inverted. It has not been activated. In order to be activated, we'll need to break this neckline. And if so, then we'll potentially activate a bullish objective. But still, I will remain cautious with Bitcoin simply because we have the 200 moving average trending downwards, and the price hasn't get a clear direction yet. However, it's quite interesting that in this occasion, the Bitcoin, which traditionally tend to follow the same direction of majority of the stocks, because if it's equal, if not higher, more volatile than other stocks, it's very interesting that in this occasion has been able to remain in good shape and still not drop as much as on the stocks has done, for example. Right, moving into the stocks. Not much to comment here from Apple. Apple is trying to find a bit of support around the 192 area, which is correspond to the 50% Fibonacci retracement. Losing it will be very damaging because then the next support area will be the 176. And then, unfortunately, if we lose it, well, it will not look things overall beautiful for Apple. Obviously, Apple is a fantastic company. It's massive. I wouldn't short this type of businesses simply because of the normal momentum and the strong direction they have. But obviously, they're in a correction phase, and rather than trading or shorting these kind of stocks, I'll just simply look for buying opportunities when the stock has stopped going downwards, and then obviously a reversal move activates. Moving into Amazon, so we lost, unfortunately, with Amazon the previous trend line, and this week we basically faced an actual rejection, which will be the first area of actual resistance. And at the moment, we don't have anything clear with Amazon, exactly the same analysis as past week. Prices are currently correcting. We have the 200 moving average now that will act as a resistance. We have this area in the 189 as well that could act as an initial resistance. I wouldn't even bother to jump just simply now on Amazon because I simply don't see anything. With Google, it's an interesting situation. So Google is one of those ones that actually corrected beyond the 50% Fibonacci retracement from all this movement that was born back in November 2022 that lasted until February 2025, and we have the price correcting within this area. It's very important that we break the previous, because we currently are trending downwards. So it's very important that we have the first resistance area, which is in the 159. Then we'll have another resistance area on the 170. And finally, we'll have the 173, the resistance with the 200 moving average. Meta, this one is probably the one that shows the highest strength at the moment. I'm on the Magnificent 7. We currently are correcting in the 38.2% Fibonacci retracement in the 489 area, and since then the price is quite stable. It's very important that we don't lose the 481, otherwise we will find by matter of probabilities the next Fibonacci retracement level, which is the 413. Moving into Microsoft. So Microsoft has activated a very long rectangle, which will lead the price potentially around the 61.8 area, slightly lower. To me, it's hard to believe that Microsoft will trade that low, but it doesn't matter what I believe. Once again, you need to have a quantified system, backtested, that tells you when to buy, when to exit, and have a solid plan in place. If happens A, I'm going to do B. If happens B, then I'm going to do C. And not take any opinions or any recommendation based on what I say. This is purely my personal vision and of how I do see the current market situation. And obviously, you need to do your own homework and don't take anything what I say as a buy or a selling direction. That being said, we've got a price that has been naturally trending downwards on Microsoft, and currently we are on the 38.2 Fibonacci retracement area. Microsoft still has activated bearish objectives, so I wouldn't run to jump in. Again, on the Magnificent Sevens, in general, the way how I approach them is rather than going against them, you just simply wait until the price stop obviously going lower, the price start having reversals, trend changes, and then once the trend changes, you just naturally jump on those. Because over the long term, we need to also have good intelligence and good perspective that Microsoft has this beautiful pattern across the years with ups and downs. We have periods of absolutely madness, especially around the 2000 area, also the 2008. But since then, we have been trading very positively up. And now, on the shorter term, we are seeing a natural correction. And I wouldn't just simply rush because the price, we think it's cheap. It could be even cheaper than that. So we just simply need to wait. NVIDIA has activated a double top that was achieved, then first Fibonacci wave, second Fibonacci wave, and currently we are on in the middle of nowhere, basically. There is no any structure currently forming on NVIDIA, possibly head and shoulder inverted, but not clear. We have a gap that hopefully will need to be closed, otherwise this will be the first area of resistance. Then we have the 115.1 and then the 200 moving average. Tesla. So Tesla is currently forming a wedge pattern. So if I draw here within the channel, within the chart, then we'll need to break beyond this wedge in order to activate a bullish signal, but we need to wait for that to happen. At the moment, there is nothing. It's a potential pattern that is on the way, but hasn't been activated yet. Again, very important that we don't lose the 214 area. Otherwise, situations could look very, very ugly for Tesla with another potential downside move. In general, all the market recap is actually in the same spot as last week. We are not really in a bouncing period. Since the 7th of April, I will remain cautious to jump in. I don't see any reversal patterns yet, simply yet, and we'll need to wait until further structures start forming in the horizon. However, high volatility periods also precede market bottoms, and we take market bottoms as the beginning of bullish trends. That's everything for this week. I hope you like it, you subscribe, and anything you would like me to improve, please drop into the comments. Have a good Easter week and see you until next time. Bye bye.